Should you be buying a property now or should you wait? This is a question tons of people are asking themselves.
What really is hampering people at the moment was so much conflicting information. The real elephant in the room is not if interest rates drop, it's when interest rates drop.
With all the talk of a potential market crash, you'd be forgiven to think waiting could be a good idea. This episode, Dawn Fouhey, self-made millionaire and founder of Future Proof Property Advisory, walks us through how sometimes indecision can cost more than the wrong decision.
If you're waiting to save another 20% and you're on 80k a year, you could be waiting another 2 years. By then you could have missed out on 200k of capital growth. If you're going to be priced out of investing.
What are some points people can understand about facts versus the opinion side of it?
I think what people need to focus on is that
if you've been sitting on the fence about buying a property and want to understand more about how getting into the market sooner might be the right decision for you, you're going to enjoy this episode. My name's Todd Sloan. This is the Pizza and Property Podcast, and you're listening to my chat with Dawn Fouhey. Dawn Fouhey, how you going?
Great, Todd. How are you?
Good to have you back on the show. I'm very keen to unpack this one because I think it's something that a lot of people struggle with. It's a big question. Should you jump into the market and invest? Or maybe are you better off sitting on the sidelines because maybe there's a better time coming? Now, as a buyer's agent and a successful property investor yourself, you see this from multiple angles. And I wanted to really unpack this with you from the whole concept of should I invest now or should I be waiting? The first cab off the rank, though, is really the elephant in the room, the big crash that's coming potentially. How did you want to approach this, Dawn?
You should definitely wait for the market to crash, at least by 50 or 60%, because there's already too much competition out there buying at the moment. So less people buying would make it a lot easier.
I'm not sure if the sarcasm is coming across for everyone, just in case.
Yes, no. It's much like the people who were waiting during COVID. Oh, I'll just wait until next year.
I sold houses for people at the very start of that when I was an agent and there was exactly that. They're like, oh, we're selling our house for 500 grand because we're waiting until they're going to go back to like 250. And then they shot up to $1 million and they were sitting on the sidelines going, oh, that was a bad idea.
Yeah, in my opinion, there won't be a market crash. I think that the real elephant in the room is not if interest rates drop, it's when interest rates drop and then what will happen to the market. It'll be like throwing petrol on a fire because once that sentiment comes back and people are more confident in getting out there and also spending exactly what the bank has given them, it will drive house prices higher than we have seen due to the lack of supply. New builds aren't just going to appear out of the ground, 1.2 million of them within the next 6 to 12 months.
And so when you say it's a when for interest rates, what makes you so confident it is more of a when, that we're not going to just be in this kind of like 4.35% holding pattern for the next like few years?
Well, it's a really sad thing to say, but interest rates dropping isn't necessarily a good thing for the economy. It's showing us that our economy is suffering and slowing. And the latest ABS data is showing that the economy is slowing, inflation is coming under control, and interest rates are the only lever the RBA can pull to try and temper that.
Weren't we like 0.2% away from like a negative quarter or something like that just recently?
Yeah, and you know it's not a good thing to see interest rates dropping. It's kind of like a stimulus to the economy, or revive the economy by dropping the interest rates. But I guess for people having more discretionary spending and for having to spend less on their monthly mortgage repayments, it's a good thing. But I think that'll just mean that house prices will go higher.
Feels like it's almost like a little bit of a coffee hit. It's nice in the moment, but then you're going to pay for it later. So we might actually enjoy it individually by cheaper mortgage repayments, but as a collective, there's a negative side to this. That's what I'm really hearing from you.
For sure. And I think what really is hampering people at the moment, or hampering them from investing now, is so much conflicting information. You've got the tinfoil hat wearing brigade who are loudly, bellowing, like your Harry Dents and all those kind of folks that, the market's going to drop by 50%. Then you've other people that are really bullish saying it's going to grow. And then people, leaving Melbourne in droves and people investing in Townsville. And there's just so much information and noise out there. I get why people are hesitant precedent and stuck really in this analysis paralysis.
Talk to me more about the Harry Dents of the world, and not to single him out, but just because he's been in the media recently talking about a 50% crash, but there's plenty of people like him doing this. What are some points people can understand about that to maybe seek some comfort from facts versus the opinion side of it? Does that make sense?
100%. Like, everybody has an opinion, but it doesn't make it factual. So I think what people need to focus on is that not all housing in Australia is unaffordable for the local demographic. So property can't be boiled down to something as simplistic as supply and demand. There's about 50 other things you have to consider, and it always is kind of annoying that people say, oh, it's just supply and demand. Well, it's not. It's, affordability, economic diversity, and a whole host of other things. And people can afford to buy in markets now that are 400 to 500k.
Mm-hmm. And so where do you see that going then if the trends continue? And again, looking at this as buy now versus waiting.
Look at a few years ago when you could buy in Brisbane for, around Goodna for 250k. Where are those prices now? 600.
Yeah, I was going to say high fives into the sixes.
High fives into the sixes. So from what we're seeing, that 200 to 300k price point in any markets where you'd actually, invest, there's no stock there, and that price point does not exist. Even the sub 400k price point isn't really a thing now. 400 to 500k seems to be that sweet spot. If you're waiting for a crash, you're going to be priced out of investing. And this isn't to, scare people. This is unfortunately what's happening because we have an increasing population across the board, because Australia is a fantastic country to live in. You have constrained supply because we've nobody to build these houses, and the cost of building is so high. So you need to focus on affordable markets for local demographics who can afford it. And that will not put you under so much pressure as well, paying out of pocket costs, because, the yields will be a little bit higher too. So
for you, when you say affordable markets, you're kind of writing off the blue chip side of things as an investment?
I think there's a time and a place for, blue chip versus, regional markets and cheaper properties. I think that for the average person out there, they can't afford to be 40k negative a year holding a blue chip asset. So, 70% of investors get stuck on one property. So a lot of the time that could be, they've either bought a crappy investment. It might have been some off the plan apartment or house and land package. Whereas a lot of people just need to focus on getting into markets that are affordable, that they can hold.
So essentially the confidence that people need if they do want to take action, but they're just sort of sitting on the fence, is looking at it from a point of view where there isn't opinion side of things. It's like the population is increasing. We're increasing it at record rates. The supply is diminishing. We're trying to keep up with it as a country, but it's just not happening. So those two factors already. Then we're also looking at the fact that interest rates are more than likely going to come down. Well, there's no crystal ball. It's pointing towards that direction though. So if you're looking at the market going, oh, I'm going to wait, maybe consider those factors going, do you really want to wait where there's going to be more pressure, less supply, and then more affordability to actually borrow? It's probably not exactly a recipe for a 50% crash.
No, and then it's the opportunity cost as well of waiting. So let's say you only have a 5 or 10% deposit now, but you're scared of paying LMI. A lot of the best decisions we've made in investing, we've personally used 10% deposits, we've paid LMI, we've used, third tier lenders that have been 8% interest rates to get us into markets when they were on the come up. So I think it's about taking that risk, and sometimes LMI is just the cost of doing business and enabling you to leverage. If you're waiting to save another 20% and you're on 80k a year, you could be waiting another 2 years. By then you could have missed out on 200k of capital growth. So I think for me, a lot of the time it's about helping people reframe their mindset and focus on opportunity cost and focus on an investing strategy that meets your risk tolerance.
You know, the thing that always gets me with the doomsdayers is no one ever holds them responsible for lost gains. Like if you listen to so many people in Sydney, I won't name more names. I probably shouldn't have even named Harry. But you listen to them back in like 2012. I remember watching a 60 Minutes report talking about the incoming crash in Sydney. And then it was one of the biggest booms Sydney had ever had. And it's like, but no one ever goes, oh, wait a second, I lost millions of dollars because I listened to you. They just continuously shout it from the rooftops that everything's about to fall apart. And whilst I think there is some kind of inherent nature of like, we have a negativity bias as humans. It's one of the things that makes us go, oh, is that a lion? And it keeps us safe, like from the reptilian brain or whatever it is. And maybe it's one of the things that attracts, I guess, some comfort when you're looking at it going, maybe it is going to crash. I'll stay safe. I won't do anything. But really, it's not actually safety because it's keeping you away from the things that could actually make your life better if it's done properly.
And it's also based on your opinion that property is too expensive. But people are forgetting that Australia is one of the richest countries in the world where most of our population are actually mortgage free. And, you know, we'll see the biggest transfer of wealth once we move on from the boomer stage. If anything, property in Australia is poised to keep rising. The only thing that could affect it is if there's an overshoot in supply and, you know, suddenly we build 2 million houses. You know, unless you and I are getting out the hammer and nails and, you know, popping together a house.
Well, I don't have any plans to. Like, I mean, I'm free this weekend if you want to try. But
just knock together a little shack.
Yeah, why not?
That'll cause the market to crash, definitely.
Yeah, definitely. Well, maybe the house will. I don't know what your building skills are like, but I can renovate, but I couldn't build a house from scratch.
No, can't even build Lego.
Anyway, Dawn Fouhey from Future Proof Property, thank you so much for jumping on the show. Really appreciate your time.
Thank you, Todd.